traders, this video is brought to you by Blueberry. Today we're diving into the continued weakness of the US dollar and why this trend is unfolding. So let's get into it. The US dollar has been on the back foot lately, and the main driver, falling US bond yields, specifically the 2-year and 10-year yields, which are the most reactive to interest rate expectations, and they have been dropping. When the yields fall, the dollar tends to weaken. But why are yields falling in the first place? Well, the US economy is showing some signs of strain. Key economic indicators, especially those tied to consumer activity, are declining. Last month's non-farm payroll, or NFP numbers, were a huge miss. We went from 307,000 new jobs down to just 143,000. That's a significant slowdown. And with new government job cuts coming, thanks to newly created Department of Government Efficiency headed by none other than Elon Musk, this trend could continue. But it's not just about jobs. US retail sales also took a hit, dropping from 0.7% to minus 0.9%. Now, some of that could be seasonal. People tend to spend a little bit less after the holiday season, but this drop was larger than expected, signaling a more cautious consumer. The Producer Price Index, or PPI, also declined, and GDP is projected to fall from 3.1% to 2.3%. This all points to a slowing economy, which could keep pressure on the Fed to cut rates sooner rather than later, adding more fuel to this US dollar downward trend. Adding to this, the latest Federal Reserve minutes revealed discussions about potential pause in quantitative tightening, or QT. This is a major shift as the Fed has been actively reducing its balance sheet. A pause in QT could mean more liquidity in the market, which would further weaken the US dollar as investors anticipate looser monetary policy ahead. Consumers are also worried about tariffs and the potential impact on prices. If people believe that costs are going up, they might start cutting back on spending even further. That's another headwind for the economy and the dollar. So, what does this all mean for traders? Well, a weaker US dollar could mean upside for Euro US dollar and Pound US dollar, while dollar yen could see more downside. If the trend continues, we could see these pairs making some significant moves. So what do you think? The US dollar weakness just beginning, or will we see a reversal soon? Drop your thoughts in the comments. Don't forget to like and subscribe, and I'll see you in the next update.